All right, what's up traders? What's up tycoons? Super excited for today's video. We're going to go over Mullen, okay, ticker symbol MULN. And as we can see, it's down massive from its highs. We're going to take a look at the Bollinger Bands currently squeezing here, go over what the Bollinger Bands are, take a look at some of the current different setups we have in the chart right now. All right, and then we'll take a look and zoom in on the daily time frame. All right, we do have an engulfing and inside bar pattern forming here along with some bullish divergence. All right, we'll go over, what those candlestick patterns are. We'll also take a look at the short interest ratio and short volume. Okay, and we'll give a shout out to today's sponsor, which is Simply Wall Street. It's a great platform. You guys can use it to actually dive into the fundamentals of stocks a little bit more, and it's very easy to use and gives you guys some very nice graphs as well that we'll go into. That way, if you're not a pro at fundamental analysis, you can get some nice quality work from Simply Wall Street for a very affordable rate. We're also going to go to optioncharts.io and we'll take a look at some of the put to call ratios as well as some of the high open interest option expiration dates. All right, now full disclaimer, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. All right. And we'll go ahead and get into it. Now, as I mentioned, guys, Mullen is down 98% from its highs. Pretty much 99% almost. I mean, this stock is just completely, absolutely obliterated. All right. And so what we're going to do is, dive into it a little bit more and see if there's any trading opportunities in the short term, right? So make sure to smash that like button and subscribe to the channel. All right. If we take a look here on our daily time frame, we do actually see that these Bollinger Bands, which is going to be these three sets of lines right here, they are squeezing right now currently, right? You can see these periods where it's squeezing, and typically the way the bands work is when they start to squeeze and they start to start trading like this per se, right? You see them squeezing. Okay, you'll see an expansion period, right? And then they'll go like this, right? And they start to expand, and then they'll get bigger, and then they come back in and they start to contract again, right? And you can see that right here through the chart. You see these periods where it starts to squeeze and then it expands, right? We have a move to the upside, all right, and then it moved down, and we've really just been straight squeezing right now, suggesting we have some type of a big move coming relatively soon. We just don't know exactly when it's going to come, right? Now, if we go and take a look here, all right, what we can see is we do have some bullish divergence forming, okay, along the RSI and the MACD. If you're not familiar with that term, I'll break it down for you guys very simply. So what you want to see here is, we have a low and then we have a lower low right here, right? So clearly, the stock is making lower lows. But if you look at your RSI, you have a low and then you have a slightly higher low here, right? So in this case, what we're doing is we're actually increasing in relative strength while the price of the stock is going down. Remember, that's what your RSI is. It's your relative strength index, and it's going to measure the relative strength of a stock at its given price levels. And we can see that we are starting to get a term known as bullish divergence. We also have the same thing here on our MACD, right? We're seeing that we have this lower lows here, but on the MACD, we're also in an uptrend here on our MACD. So, it'll be interesting to see if that plays out. All right, we do have a small gap up to fill right here, indicated by this blue box. Now, if you're not familiar with gaps, what they are is essentially there's a gap in between the bottom of this candlestick and the very top of this candlestick, okay? And those spaces in between there are simply known as gaps. They fill about 90% of the time historically. And if you take a look at Mullen's last previous gap, right, it did have another very small gap up. And within a week, we can see it came up and filled that gap, right? And so we're going to look and see if that is going to happen. There's a possibility that could happen, right? And that would be about a 44.51% move from where the stock is currently at, right? So, that's definitely something that I'm paying attention to. Now, I mentioned that we had an inside bar and an engulfing candle. So this is actually the one we have right here. It's a bullish inside bar. All right. If you take a look, looks just like that right here. Okay. So we do have a bullish inside bar here. All right. And then we have a bullish engulfing candlestick as well. Right. This is your bullish engulfing candlestick right over here. You see, we opened below. Okay. So this candlestick opened below the previous close right here. and it closed above, right? And that essentially right there is a bullish engulfing. So, we have kind of like two candlestick patterns here at the moment, with the first one being the inside bar pattern, and then the second being the, bullish engulfing candlestick right here. Two patterns suggesting we could have some type of bullish activity. You combine that with the bullish divergence along the MACD and the RSI, and that's why right now Mullen has my attention. Okay, now none of these patterns are guaranteed to be 100% and work 100% of the time. But once you start to see multiple signals aligning together, you start to see 1, 2, 3, 4 different things aligning, suggesting some future price action for a stock. Well, that's when things get a lot more of my interest, and it's going to be really interesting to see if we do get some positive reaction in the price movement of Mullen. Now, I mentioned today's sponsor, Simply Wall Street. There's a link in the description or a pinned comment below. You guys can use them to get a 14-day free trial, and also the first 100 people to join will get up to a 40% discount on their purchase. These are some of the features that come on the Simply Wall Street platform, right? If you take a look at the shareholder returns, okay, of Mullen versus the U.S. auto sector and then the U.S. market, we can see that Mullen has really underperformed both the sector and the market as a whole, which go ahead and tells you that right here. Returns versus the industry, it underperformed the U.S. auto industry, and it also underperformed the U.S. market over the past year. All right. And if you take a look at the price volatility, we can see that Mullen is extremely high above the average market volatility and also above the industry market volatility. Mullen is more volatile than 90% of US stocks over the past 3 months, typically moving up or down 18% a week. We can dive in a little bit more and look to the price to book ratio versus the industry. And from here, Mullen does, you could say that Mullen is a good deal right now. Okay. It's got a 0.8x, and the industry average is 1.4x. We take a look at the price to book ratio versus its peers, and it's at 0.08x, and the peer average is 1. So Mullen is a good value based on its price to book ratio compared to the peer average, right? And these are some of the fundamentals that Simply Wall Street will go down and break down for you guys very simply. And as I mentioned, they also provide a very nice graph and visual for you guys to help really understand it a little bit more. Now, some of the risks, okay, is, it's basically returns, right? When you look at the return on assets, the return on equity, the return on capital employed, okay, all three of those are negative, right? Which is not something that you want to see. Mullen has a negative ROE as it is currently unprofitable, right? And these are some of the factors that are actually beating the stock down so much, is some of these fundamentals, right? And these are things that you want to know about before you go in trying to buy something just because it looks like it's a cheap price, right? You want to dive into things a little bit more. Now, if we look at the financial health gets about a 2 out of 6, okay? With the, two positive marks being its long-term liabilities and its debt level. Mullen Automotive has a total shareholder equity of $263 million and a total debt of $7.6 million, which brings its debt to equity ratio to 2.9%. Its total assets and total liabilities are $402.7 million and $139.6 million, respectively, right? And it even goes deeper into that, and you can start looking at some of the compensation of the CEO and some of the other employees. If you take a look at the CEO compensation analysis, all right. What we have here is we can see that the CEO's compensation has actually been going up and increasing as company earnings have been going down, which is pretty interesting to see. All right. And they have that here as a red flag on Mullen. David's compensation has increased while the company is unprofitable, and his total compensation is above average for companies of similar size in the U.S. market. Right. And you can take a look at the key information of that right here. We also talked about the debt to equity ratio being at 2.9%. So, that's not terrible right there. Now let's look at the short interest ratio and short volume. And, some of these fundamentals that we just went over are going to, be some of the basis of why this stock is so heavily shorted, right? Now, if you take a look at the short interest change versus the previous month, it's up over 88% right now. So that is a very, very big interest, basically change on a month-over-month basis. The short interest ratio versus days to cover is 1.9. Right. And if you take a look at the short percentage of the float, it's about 20.45%. So, we're seeing, lots of short interest. Bears are all over this stock. Okay. It had a very terrible day on Friday. It was down about 14.77%. So big move down. All right. And bears are feeling really good and really profitable right now, based on their shorts. But there is the potential that, we could see some of these shorts squeezed out. And we are seeing a couple of bullish signals from a technical analysis standpoint. It'll be real interesting to see if any of these play out. Now, when you look at the option chain data, okay, which option contracts are basically contracts to buy or sell 100 shares of a stock at a given certain price by a certain expiration date. Okay, we can see that the put to call ratio is 0.16, indicating a bullish sentiment in the market. So the option traders are very bullish on Mullen when it comes to, basically the option chain. Okay, and if you look at the open interest for the June 2nd, 2023 expiration date, we see that there's a large amount of call options here at the 0.5, the $1, and the $1.5 strikes. The put to call ratio here is at 0.10. Now, this is pretty bullish. A lot of times, though, people start to use these put to call ratios as a contrarian play, right? So when things are low, like 0.20 or below, a lot of times people think that, hey, maybe it's time to get out of a stock because it's so bullish, right? So you do have to keep that in mind, when it comes to things like that, all right, in the option chain data. Now, if you go out a little bit further to the July 21st expiration date, again, we're seeing a very large amount at that 0.5 call option strike. So essentially, if you wanted to call it a wall right there, we kind of have a little bit of a wall at 0.5, so about 50 cents currently in Mullen, through about July 21st, right? There's lots of call options there in that area. Essentially, a lot of people, looking to purchase 100 shares of Mullen if it's at 50 cents or above by the time of expiration. Okay, now again, we're seeing a large amount in the $1 strike price. And remember, the green here is going to be the call open interest, and the red is the put open interest. And we're still seeing a very strong, bullish case when it comes to the option chain data, all right, with a put to call ratio of 0.16. If you go out even further and you take a look at the October 20th of 2023, it also has that same put to call ratio of 0.16. And we're seeing an even higher concentration here at that 50 cents strike price level, right? So, 50 cents is really a key area for Mullen. If it loses that 50 cents mark, that could be, a pretty rough situation for Mullen if a lot of these option, chain people and the people holding these option contracts start to dump those contracts. That's definitely something you want to watch out for and be aware of, right? So that essentially is today's video. All right, wanted to go over Mullen. It's one that really caught my attention within the past few days. Let me know your thoughts down below. What do you guys think about Mullen? Is this stock trash and you should completely stay away from it? Or do you think there's a potential for a nice little bounce here? Do you think we get the gap fill, which is about a 40% move? Do you think there's a bigger move, a bigger short squeeze about to happen? Let me know your thoughts below. Don't forget to use today's sponsor, Simply Wall Street, to get a 14-day free trial and up to 40% off of your purchase. What I want you guys to do is use Simply Wall Street, and don't just look up Mullen, look up your favorite stock right now, or look up a stock that you've really been wanting to invest in, and take a look at the platform Simply Wall Street and see how well, you like it. And you'll actually learn a lot about the stock that you're looking to invest in through the Simply Wall Street platform. And maybe it could open your eyes on, hey, well, perhaps this company is overvalued right now and I should stay away. Or perhaps you might be able to find some stocks that are greatly undervalued at the moment and, use Simply Wall Street to really help you come to that basis. So that's it for today's video. Appreciate y'all watching. Smash that like button and subscribe.